Hey guys, what's up? Hope you guys are having a great day today, and welcome back to the channel. My name is Matthew Spazzini here with New Millennium Wealth, and today I kind of wanted to talk about stop losses. Now, a lot of people, when you get into trading, they're always asking these questions like, where am I going to place my stop loss? Where am I going to place it? Am I going to place it down here? Yeah, I want to enter right here. Should I only place it a little bit above where I want to enter? Should I place it back up here? What are some indicators that we can use? So I want to talk about all that today, and just try to help you guys understand, try to give you guys a foundation that you can use for how to come up with good stop loss placements and what you guys can look for in structure and what you guys can look for overall in the market. So let's go ahead and jump into it. We're going to go to AUDCAD. Now, this was a trade that I took last week. I placed my entry on right here, my stop loss, my target, and we ended up getting filled over the weekend. It was actually really great. I mean, I love seeing these where I place my entries on and I end up making money. I love that. Absolutely amazing. So guys, what I do for my stop loss personally is when I identify an area that I want to start trading in, what I do is I actually like to identify the structure level that I want, where I want to measure my fib retracement tool from. So in this case, I didn't choose this because I thought that'd be a little too farther down. I wanted to choose this area. So I chose this structure low, swing low to swing high. And then I chose this structure high up here. And then this, I have my entry, my target. And what I did was I actually counted 10 pips from the low that I chose, the lowest low that I chose to measure my fib retracement tool from. I chose 10 pips, which was, let's see, this is 90.24, and I decided to subtract 10 pips from that to 90.14, and that's how I got my stop loss. Now, I will say in my back testing, I have seen on the CAD Swiss, because I just finished backtesting on the CAD Swiss, the strategy is about 51% consistent, and we've made huge money on the CAD Swiss. Took a $3,000 account all the way up to $5,000. All hypothetical money, of course. This is backtesting, right? This isn't real money. And it was really, really cool. This stop loss does work as long as this currency pair you're looking at is you have a positive expectancy and you have a high consistency rating in terms of trading and winning trade. Now, this doesn't mean that, 51% I wouldn't say is necessarily high, but it's plenty to make money in the markets, especially when you're only taking a 1.35 risk reward ratio and stuff like that. So it's not bad. It's actually pretty good. So that's what I do. And it's not dynamic. It doesn't really move with the market. But that's how I determine what I'm going to trade and how I'm going to trade it. So let's go ahead and go up to the daily chart. I want to actually use this feature. I love this feature. I don't know if you guys have checked this out yet. It is Forex Market Replay, or Market Replay is what it's called. Let me go ahead and zoom back here so that I don't really know what's going to go on, because I've actually been watching this chart here for a bit. Let's straighten up so it's almost a straight line here. Okay, this looks good. Replay right here. Boom. Gone. Awesome. Love it. Now, let's go ahead. Now, we are on the daily chart, as you can see from this indicator up here. We have no idea what's going on right now. So if I was going to try to tell you how to place your stop loss in this situation, yeah, not going to work. Our indicators don't have 7 candlesticks to collect data from. So once again, not going to do us any good. So what we need to do here is tick this forward. All right, that's the next one right there. It's a good candlestick. All right, so we made a new lower, low, lower close. Still, I don't feel confident enough. I just don't have enough data to really even look into it. So let's kind of just zoom this forward here. Okay, right here, actually we kind of missed out the opportunity. I got a little carried away with zooming this thing forward. We actually did have a break below, close below. What we could have done is we could have taken a fib retracement tool, measured from this swing high to this swing low right here. We would have gotten filled, and then we would have ended up rallying or falling all the way down here, and we would have ended up making money. But like I said, it's kind of small, and I would still prefer to wait a little bit more. And I could have done that, but I ended up getting a little too cavalier with zooming this thing forward. So we're going to go ahead and keep moving it forward tick by tick. Here we go. We got a break above structure. So what I'm going to do here is I'm going to go ahead and draw my fib retracement tool for this swing low to this swing high. I got my entry, and when I want to place my stop loss, assuming that we even get involved, it would be 10 pips below this low. Okay? My theory is that while it's not perfect, I like to keep things simple. There are much different, better ways. Well, I don't know about better, but there are different ways in which you can use indicators and things of that nature to determine what you want to do for a stop loss. I mean, I have average true range up here. I got a 7 RMA average true range. You could totally use that in order to determine stop losses. So we will definitely talk about that here in a minute. But let's go ahead and just see what happens. Are we even going to get entered? Looks like we're just... probably not. Oh, well, I don't know. I have no idea. Oh, boom. Right there. Okay. So we got entered in the market. We got our entry point. Let's put a yellow line there. And then now we need to place our target. Now, I have no idea whether this is going to work out or not, as you guys well know. And our stop loss, 10 pips below that, 84.57. So 84.47 is what we're looking at. All right, right there. Now, that is how I place my stop loss. Now, let's see what happens. Honestly, I'm thinking it's going to get stopped out, but let's see what happens. You never know. Yeah. Oh, right there. Now, it may have actually touched here, but unless you're going to go zooming in on the whole thing, you're not really going to know. But yeah, so we ended up getting stopped out, right? It's not always the best way to conduct finding a stop loss. It's not dynamic, right? So what I mean by dynamic is it doesn't change with the market movement. Average true range is going to change with the market movement, but there are some issues with average true range. So real quick, let's go ahead and see what happens here. We didn't actually break below, close below here. We're kind of making what looks like a double bottom, but let's see what kind of happens here. Yeah, just so I don't have to constantly click over and over. I'm sure that's annoying to hear the clicking noise. Just really nothing going on. Just we're kind of consolidating, just really going sideways. Kind of sucks. Oh, right there, right there. Okay, we fast forwarded a little too much. Okay, so we broke above, we made and closed above, so that's good. Now we have a measurement. Now here is a really excellent opportunity. This is going to determine where you're going to place your stop loss. So this is what's very important. Where are you going to choose to measure the fib retracement tool? Assuming that you're trading the strategy that I'm trading, are you going to place your draw your retracement from here? From here? Ideally, this is where the trend started. Now, I don't know, we may not get a good risk-reward ratio from here. According to my trade, I have to have a trade that is at 200 or under in terms of risking, in terms of pips. Otherwise, I can't take the trade. So let's see what happens. Which is actually one of the reasons I use a 10 pip stop loss. Yeah, looks like we're not. Okay, so we're clearly not going to get lower here. So we can zoom this thing up. If this continues to increase higher, this will be what I'm going to do. I'm going to start moving the fib retracement tool. Keep going. We're still higher. Not cooperating with us, is it? Yeah, I'll let it go a little bit longer, and then I think, you know what? No, I'm just going to go ahead and move it to here. Just keep going. See if we get a retracement at all. The market is just on a tear. Not at all looking like it's going to give us any kind of a retracement whatsoever. You know, I don't really know what's going to happen here, guys. I guess we just got to keep going. Yeah, and this is one of the greatest features about TradingView. You used to have to pay a lot of money to some charting platforms in order to get this. It was actually really, really just something you had to do. I mean, I think eSignal had this. eSignal was like $100 a month. You don't even have to pay that, and you get this Now, if you're on a free account like me, you can only do it for day trades and like daily, weekly charts, stuff like that. But if you actually subscribe to the Pro account, you can get the intra-day charts like the 1 hour, the 15-minute, the 30-minute, stuff of that nature. All right, I'm actually just going to delete it and wait for a pullback. All right, we looking like we may have a pullback here. Can measure from this structure low to this structure high. We'll swing low to swing high, see what happens. Okay, we got involved. Perfect. Absolutely perfect. Let's hope this ends up working out. I'll put my entry, my stop loss right here. 10 pips below the low. This is 94.64, so we'll go 94.54. Ugh. Okay, I'm going to have to stretch this chart out here. Yeah, you stretch it out again. It keeps jumping on me. Actually, it's 94.65, so let's go to 94.55. There we go. Perfect. Right there. That's exactly what we wanted. And now that we are long officially, which is not correct English, but whatever. It's fun to say. Right here. And let's see. Do we have a 1-to-1 risk-reward ratio? I believe we do. We have to. I have to at least have 1-to-1. We got 1.28, so that's good. Let's see what happens. Just boom, right there. Perfect. But you see kind of how I decided where to put my my stop loss. Once I saw the market was kind of moving down, I decided to go ahead and draw the fib retracement tool at that point, and then I placed my stop loss 10 pips below the most recent structure low. Okay. Now you might argue, well, you could have taken less risk if you did this. Let's assume this was 10 pips. I'm not actually going to measure this out, but let's assume this was. Okay, you could do that. Again, I don't have any problems with you doing that. As long as you're doing that and you're back testing, that's fine. But here's the issue that I have with this, is that this is pretty darn close. This was the obvious start of this little leg of this little move right here, this little trend, if you will. You know, I know this is minor structure. It's not major. It's not anything big like this. This is ideally, this is what you would want to see. You would want to see it come up here, break above structure, retrace down, and then go ahead and rally from there. But unfortunately, we didn't have that. We just had the market was on a tear a lot. And it came all the way up here, and it just didn't really retrace very low. So, but this was the most recent significant low, structure low, in my opinion, that's closest to this. If you were to measure it all the way down to here, that's really minor structure. I wouldn't measure it all the way down to there. Not to mention the risk-reward ratio simply just would not be in your favor. You'd probably be taking well over $200 risk with that type of trade. Or you could go all the way down to here. Either way, if you want to do those kind of things, again, it's up to you. Just make sure you backtest that strategy. But for me, that's not how I trade. So you can use this kind of situation here. You could use it here, but I think you have a high likelihood of getting stopped out. And what I think this would do is it would probably reduce the consistency in which the strategy wins on whatever currency pair it is. Now, some currency pairs that have a high consistency rate, this may end up working out for you. So just because I don't like it doesn't mean you don't do it. Test it. Verify it. Don't take my word for it. Make a trading plan, identify how you want to take the trade, lay it out, and then go and test it, okay? This is one of the greatest ways to do that. Go and test it. And for me personally, I like to say, okay, this was the most significant structure level in a while. So, and this is where I measured my fib retracement tool from, because it's the most structure level. From my eyes, I trade what I see, and this is what I see. So I decided to place my stop loss 10 pips below the low in this case, and it ended up working out really, really well for us. We ended up making a little money. I'm not even going to do the math on this because it's not really the purview of this, but this is how I do it. Now, I'm going to show you how you can use the average true range. There are other things too. For example, we have a 00 price level. This is what we like to call an even handle number. Now, ignore the zero on the far end. That's the fifth zero that's not intended to be considered in this. You also have a 9,700, 9,800, 9,900. These are all 9,600. These are all even handle numbers. So the closest even handle number to where my structure low was the 9,300 down here. So double zeros are even handle numbers. Triple zeros and double zeros, these are even handle numbers. And what they mean is these have psychological importance to the markets. Psychologically, traders like these price levels. They tend to react well. Like, look at this. This came all the way down here, which I know it wasn't a big retracement, but it came all the way down. And it barely touched the 9,700 even handle number right here, right? Let's see if I can actually get this. Yeah, it's not going to actually go completely. I don't think it actually touched it. Well, it may have. Oh, it was close. It was really close. No, it just barely missed it. But still, it responded beautifully to the 9,700 level, and it ended up coming all the way down and bouncing off of that level. It didn't touch it, but it got close enough. We could say that it was a support level, and it ended up bouncing off of it. I mean, how amazing is that? So this is just one quick example. There's tons of other examples. I mean, if I zoom back here, I'll probably find another. Oh, look, 8,500, double zero. So it's an even handle number. Look at that. Look left, structure leaves clues. We bounced off it twice. Once, two, well, actually 3 times right here. 1, 2, 3. We almost even bounced off it a 4th time. How amazing is that? These even handle numbers. These are just simple examples. If you go and you actually pay attention in your trading, you're going to see these a lot more often. Make note of all the even handle numbers. Maybe take a blue line like this and draw them in for all the even handle numbers that you can see, and see how price treated them. See, not only did we bounce, well, I say we bounced off the 9,700 even handle number, but you could say we bounced off we broke a little bit below the 9,800 even handle number, and then we bounced off of it. We also got rejected several times right here as well. You can already see the technical analysis and the confluence of this. So make sure that when you're placing your stop losses, make sure to understand where you're going and whatnot, and understand where those even handle numbers are, because, dude, you can get wrecked if you're not paying an ounce of attention to those even handle numbers. You take a trade, and let's assume your stop loss is right on top of an even handle number, or right below it, or right above it. Try to move it a little farther away, or at least you can do that. That's something you can do. So make sure to identify those, because the markets tend to be attracted to them. And if the market is getting closer and closer to one of those, and your stop loss is within the near vicinity of one of those, you are highly likely to get stopped out. So it's a very, very good idea to try to place them as far away from those even handle numbers as you possibly can. And again, you don't want to take such large trades to the point where you are risking an obscene amount of money. Whatever you decide to do in your trading strategy, you need to place it far enough that's reasonable, where you're not taking a massive, massive amount of money. All right, so you don't want to take a trade that's, where you're risking $500, $600 on the trade. You don't want to do that. So make sure that you're placing it far away, but not too far to the point where where you're taking too much risk. It's all about managing that risk, guys. That risk is incredibly important to be aware of and to manage. So here's another opportunity here, or potential opportunity. We'll actually see if it gets down to 618 retracement. Let's actually use another favorite of mine of determining stop losses. The average true range indicator, okay? The average true range indicator is actually down here in yellow. Go ahead and ignore this 5th digit, just like we ignore the 5th digit over here. Just pay attention to the first 4. So what I like to do is, when the market ends up getting me involved in the trade, and we'll see if it does. Yeah, it's not going to. Let's see if it. All right, right here. This, we actually did get involved. We would be able to get involved here. So let's go ahead and do this. It's over here. We got our entry. Let's actually tick this back a little. Can we tick this back a little bit? You know what? It's not important. We'll just go ahead and leave it the way that it is. All right, so let's assume we got involved in this trade. Now, I don't want to just do a static 10 pip stop loss. I want to do something that's dynamic, something that moves with price action, moves with the charts. A 7 RMA, and I'm not really sure what the RMA is. I think it's, I really don't know what the RMA stands for. And there are different, and when you're on TradingView, there are different ways that you can have the smoothing ratio work out. You can use RMA. I know smooth moving average, I think. EMA is exponential moving average, and WMA is weighted moving average. I don't actually know what RMA stands for. So you're going to be taking an average of 7 candlesticks. That's what the average true range does. So it calculates 1, 2, 3, 4, 5, 6, 7. It takes the highs and the lows of all 7 of those and averages it out and gives you a ratio that you can use to determine your stop loss. Now, in our case, if we look down here, I'm going to hover my crosshairs over the candlestick where we got involved, which is right here. As you can see, look all the way down here and look over to your left, and you'll see the numbers that we're looking at, or that I'm looking at. And I see that we have a 0.0143. Again, we're ignoring the 5. What does that mean? We have 100. Our average true range is 143. Now that's 143 pips. Okay. Now what we can do is we can take 143 pips and we can use that to go ahead and use it to place our stop loss. What I tend to do is I like to take, if I'm going to use average true range, I like to use a 2 ATR, a 2x ATR. So I like to multiply whatever the average true range is giving me by 2. So for me, that would be 286 pips. That's a lot. And automatically, I'm not going to be able to take this trade if my target is going to be here. And this is one of the downsides to average true range. Okay. So let's see, 286. Let's just make sure my math is right. Should easily be right. 143, obviously times 2. 286. Let's go ahead and subtract that from 9702, right? 9702. And we've got 9416. Oh my gosh. That's ridiculous. Okay, so we're going all the way down here. Let's go ahead and get our red stop loss line. 9416. Right. Okay, we're not going to get 16, are we? Of course not. I hate it when it does this to me. It's like, really? Well, okay, let's say 9417. So we're not quite at 246 pips. But this is what, now this is dynamic, right? It goes with the market. Now, right away, we can see here, let's go ahead and use our long position tool. So as you can see right here, we've got a 0.65 risk-reward ratio. It's not even a 1-to-1. Now, if you win 70, 80% of the time, sure, this is great. But again, you're losing. I mean, how many is this really? I mean, I like to do this when I'm actually trying to figure out how many times can I lose before I have to make a winner. This is a great option here. We're going to clone it. So right here, there's one. Clone this one again. And like right there. So it's like 1.5. So we have to make 2 or 3 to make up. We at least have to make 2 of these type of trades just to make up for, to be ahead of the losses, because we're risking 1.5 to 1 in terms of the pips. And obviously the pips, we're not really adding them up. So that's we're just generalizing here, but that's not a good risk reward. You have to have a very highly consistent strategy to make that work. So what we could do is we could use the fib extension tool and measure it from this swing low to this swing high and back down in. Okay. And then we could place our target all the way up here. Now we have a 1.11 risk reward ratio. Now, granted, again, you don't want to be changing these things on the fly. If this is what you want to do with your strategy, then do this. Put it down on a trading plan, use a Word doc, write it all down, and then create the strategy and go from there. Don't just trade it willy-nilly because we don't know what the consistency is. So let's go ahead and actually just let it play out and see what happens. Yeah, I have no idea what's going to happen. I love this. It's watching it live, but you get all the information and you get it all right, like really quickly, and I love that. These are daily charts. It would take weeks to get these kind of candlesticks in. So let's just kind of wait and see. So far, we're just kind of going sideways. That is not a positive thing in my mind, but we could just creating a base. We could be creating a base. Nope, we broke below, so this could be very bad. Let's go ahead and do this. Gosh, man, for such a small trade, this is really going to make us like earn our stay here, isn't it? All right, so automatically, if you were to have, boom, right there. So automatically, if you were to have done this, you would have been able to take your target and place it here, and you would have made money here. But we did actually end up making money in this trade, which actually wasn't too bad. But that is one way, and you can see we didn't even come close to the stop loss. So it's just one other way that you can use to try to figure out where to place your stop loss. Now, I didn't talk at all about the even handle numbers when I was talking about this trade. We were at 94.23, so we were only 23 pips away from the 9,400 even handle number. And thankfully, we never really even worried about it. The even handle number was right here. The market didn't even pay attention to it. The market kind of came down here close to the 9,800 even handle number and then ended up finding support and then rallied. If you look left, structure leaves clues. Let's use a blue line because I like using blue lines when it comes to structure. You know, we had a structure level here that was really violated here, but it was respected twice here, and here it was kind of violated, but then it like the market lost all its momentum when it broke through these support levels and then ended up rallying. So this level, being that it was so close to the 9,800 even handle number, and we actually had some support structure levels to the left here, it actually ended up not being too bad of an opportunity that just ended up working out. Now, I would say all of this is still minor structure, and this kind of a downward move would indicate that the trend, it perhaps could be losing some momentum here, but that's my opinion. But anyways, guys, I hope that was valuable to you. I hope I gave you an idea of how you could place your stop losses. I mean, ultimately, it's really more just about understanding technical analysis, being able to read the charts, and being able to determine where's a good place to base where to place your stop losses off. For me, I like to just use a very simple 10 pip stop loss. You guys could use a 20 pip. You guys could even use the average true range. I have used the average true range in backtesting certain strategies before, and sometimes you don't get such large, average true range measurements. Sometimes they're not quite so big. In like the example that I showed you there. Sometimes they're actually much smaller. Like here, if I was to, let's just assume I got involved here for whatever reason. Oh no, that's 151. That's even worse. Is this actually going to continue lower? It is going to continue lower. Perfect. Let's see real quick. It does not continue low. It doesn't go low enough. Are you going to go low enough? Come on. Yeah, right there. Perfect. Okay, so we got involved in the trade. We're at 140. Again, that's still really high. That's 280 pips that we'd have to place all the way below here. This is one of the things that I don't like about it. If the spread between the two currency pairs, the Australian dollar and the Canadian dollar in this instance, is too high, if the spread between the exchange rates are too high, and volatility is too high, then you're going to have really, really big average true ATR numbers, which is going to require you to take massive risks. So for me, even here, 10 pips below the low, 98.14, you go 98.04, which would be right here. I mean, as you can see, that's a very, very small stop loss. If it even gets close to this, you're going to get stopped out pretty easily, if I do say so myself. So it really, it's to each his own, to be completely honest with you. I mean, there's not a right or wrong answer of how to place your stop loss. This is only 4 pips away from the even handle number of 9,800. Okay, if you could see this right now, we're right here. This is 4 pips away from the even handle number. This is not the best. So what you could do is you could say, okay, I'm going to go ahead and add 10 more pips. So I don't want to be at 9,800. I want to be at 97.99 or 97.90, right? So I want to actually be down here. So let's drag the red line down to 97.90 right there. Well, actually, that was 97.90.86. Right there. Okay, perfect. And now you're 10 pips below the even handle number. It does increase your risk a little bit. And in reality, I'd still say 10 pips is probably not enough. I mean, you might want to do something like 40 pips or something like that. So instead of being 98.90, I don't know. I'm sorry, 97.90, you could do 97.50 or 49, whatever. Let's assume this is like 97.50 here. You could do that. Again, it's going to change the risk to reward ratio, but you can do that. Just be mindful of these even handle numbers, right? So I'm sure you're all dying to figure out what's going to happen here. So let's go ahead and figure that out, and then we'll end the video. Actually, just to make it fun, let's go ahead and place the long position tool on. It's always nice, adds an element of excitement. We got a 1.3 to 1 risk reward ratio, so we are good in terms of risk reward ratio. Let's see what happens. Oh, we're making money. Oh no, what are we going to? Oh no, we're losing money. You see, this is why you don't watch the trades. This is why you don't do this live. You had real money on this. Gosh, the amount of emotional turmoil this would have is catastrophic. I mean, golly. And it's looking like it's going to stop us out. Take a look at that. It's going to stop us out. Look at that sucker. I hate it. Stopped us out. This time, it did not work. After seeing this kind of a bigger retracement, it was the biggest retracement we've seen really ever since this trend started. And then after we saw this really, really big movement, I was thinking it was going to be a bigger retracement. I didn't think it was going to be this. This looks now like a reversal to me. We broke below the structure level. That means making a new initial high, initial low, outside return, or retracement, new lower low, lower close, came back up, went ahead and came down again, outside return, new lower low, lower close. So you can actually see we've been kind of having a small bearish trend inside of an overarching bullish trend, and we broke below the structure level, which is even more of a bearish indicator. So that to me is a sign of a reversal. This could simply just be big consolidation. This could end up going higher. You never really know when you're watching this stuff live. But that being said, guys, I hope you enjoyed that. I hope I gave you a good idea, a small little lesson on how you can determine stop loss placements and, use structure. Use structure. I mean, if I was going to use this one right here, I see this structure point right here. This is the highest structure point that I notice, and I would place my stop loss, again, 10 pips above the high here. Right? So 97.74, so 84, which we totally went past. What do I do? Okay, 86, whatever. Now, notice that we're also on the daily chart. If we were on the hourly chart, the average true range probably wouldn't be giving us such crazy numbers. So being on the daily chart, price swings and volatility is significantly higher. But I would definitely use this structure level here, and a 10 pip stop loss on a daily doesn't seem very big because it isn't. All right, 10 pip stop loss on the daily is probably not enough. If you're on the daily, 20 to 40 pip stop loss, or you can use the average true range to use it. Like I said, you could use a 2 ATR, or you could just use a 1 ATR. That's fine too. If it says 75, I mean, let's see where I got to enter this. Let's assume I got to enter here. You look on the bottom left corner, it says 79. So 1 ATR, 79 pips, place it 79 pips above. That could be enough. All in all, you're keeping your eye out for these even handle numbers. You're keeping an eye out. I mean, look at this. This is a 3-0 number. This is an especially important one. And look, it played all around it, right? The even handle numbers are great psychological numbers. You can use them to predict where the market's going to go. You can use them to predict where you should place your stop losses and where you shouldn't. You can also use structure levels, like I showed you, to choose where to place your stop losses. And then if you want to use an indicator like an average true range, you could totally do that. Play around with these, how the smoothing ratio functions. The smooth moving average will change the numbers. All right. It will absolutely change those numbers. 68 as opposed to the 70 that we had earlier. You go to the EMA, the exponential moving average number, and I think we were here 74. So again, I think we had a 78 before, then it went, or no, we had a 70 number, then went into a 60 number. Now it's back to a 70. And then of course the weighted moving average, which is around here, so 71. So you can see it actually does affect the average true range number only slightly. It doesn't affect it a lot, but just keep that in mind, right? Play around with those numbers. It was 74. That was the original one with the RMA. Play around with those numbers and see what you get. But in the end, keep an eye out for even handle numbers. Keep an eye out for structure levels. And also you can use the average true range. Use these tips and tricks to try and figure out where you want to place your stop loss. But more importantly, in the end, it doesn't really matter where you decide to place your stop loss. What it really matters is that you're consistent in your back testing. It's a form of measurement, right? You don't want to measure your body weight in pounds one day and then the next day measure it in kilograms. And you're going to have to be doing conversions. It can get confusing. You don't want to have to do that, right? I mean, if you had a job where you were trying to measure out how long it took a car to stop at going 60 miles an hour, you wouldn't want to use miles and then feet and then centimeters, okay? You wouldn't want to do that. Why would you want to do that? And when you're judging the speed, you wouldn't want to use miles per hour, and then you wouldn't want to turn around and use kilometers. You're not going to measure them differently. You're going to choose one measurement. You're going to stick with it. So in this case, when you're doing your back testing, when you're trying to figure out how you want to handle the stop loss and the risk management, pick one, go with it, and see how it works. If it doesn't work well, after 100 trades, change it. If your stop loss is too close to your entry point and 10 pips, let's assume 10 pips is not working for you, go to 20. Maybe 10 pips is phenomenal and you're winning so much. So maybe you can reduce your risk. Maybe go to 5. Use 5 pips instead. Maybe you want to do something a bit more dynamic that changes with the market. You want to go use the average true range. Whatever. It doesn't matter. Just be consistent. Make sure as long as you're consistent and you're back testing, you have a positive expectancy. That is all that matters. That's what I love about trading. There is no right or wrong way to do stuff. It virtually is all subjective. It just matters that you get out there and be consistent with whatever kind of strategy that you're using. Just be consistent. And I actually had a hard time with that in my trading early on, but that was something that I got better at. I got more used to it. And yeah, it actually ended up not being as big of a deal. So anyways, guys, this is already going into a long episode. So I hope you guys enjoyed this episode. I very much enjoyed it. Hope you did too. Hope you got some value out of it. Hey, if you did, make sure to share my channel. I'm really trying to grow my channel, grow the community of traders and of people who want to become financially free by controlling the source of your income. I'm trying to grow this community here, and I really need your help. I can't do it without you guys. You guys are what makes or breaks this channel. If you guys come here every day, you start sharing it, channel is going to be successful. If I don't get anyone to view it, then no, it's not going to be successful at all. So guys, if you are getting value out of this, if you like it, please go share it. Share it on social media, share it on Facebook, Twitter, anywhere where you are. If you're at Instagram, help me to get this content out there. Help me to create a community of people. Eventually, we're going to have a private trading group where we can all go. It'll be probably like $10 a month, something around those lines, just to keep trolls out. But ultimately, it'll be a great community of people who are coming together, who are learning how to trade and all that kind of stuff. It's going to be absolutely amazing. And I'll let you know when I actually create that. But guys, it's going to be awesome. I want to create a community of like-minded individuals who love trading, who love controlling the source of their income and whatnot, and want to become independent by doing those things. And I want to create a community where we can bounce ideas off of each other. We can be support for each other. I mean, trading can be a very, very lonely career. You're in your house, you work from home, you don't see coworkers, you're working on charts. The vast majority of people don't even know what the heck you're doing. It can be very lonely. You need a community. You need a strong community of supportive traders behind you in order to become successful with this. That's what you need. It's incredibly important. I've had it before. It works. It helps. I still have it to this day. I have places that I can go where I can talk to people about the trading stuff. And I mean, I got a guy, I have access to Charles Miles. He works at Tier 1 Trading. Absolutely amazing guy. If you guys are interested in taking your trading to the next level, and you're not just interested in learning the basics of trading, but you want to learn more than just the basics, go to Tier 1 Trading. I'll put the link in the description below, as well as a link for affiliate link for TradingView. But if you guys are interested in learning, go there. So guys, look, it can be difficult going at it on your own. You need a community. So help me grow this channel. Help me create that community of people who want to become financially free by controlling the source of their income, and they want to achieve true independence, and they want to make themselves rich instead of somebody else. That's the type of people I want. If you are that, if you're getting value out of this, please share this content. Help me grow this channel. Like the video, subscribe to the channel, and hey, don't forget to check out the website at newmillenniumwealth.com. If you guys will do all that for me, I'll see you guys in the next video. As always, know the risks, plan accordingly, and have a great day.